What's going on, guys? It's GBP baby. Welcome back to another backtesting video. It's been a while since I've actually recorded my backtesting. Before we start, I just want to make sure to tell you to make sure you join the Discord, because I do post all of my backtesting analysis in there and a lot of other just useful information and materials for you guys to have access to. So yeah, we're just looking at the week of Monday the 19th of Feb. The week's just gone. Obviously this video will be out later, but the concepts still remain the same. So hope you guys enjoy. You know how we do it. And yeah, so we're going to start with the Asian range as per usual. It's the Asia low. I don't really need to mark that out. We know that's the Asia low. Then we got the Asia high, and you'll see that the high just ran out some buy side liquidity from here, and that happened at 8 o'clock as well. One thing that I've recently started to pay more attention to is that 8 p.m. candle, because I know that at 8 p.m. there's either a reversal like what we're seeing here or a retracement, and I've started to notice that similarly to what happens at 3 a.m. in the London zone. So we'll get into all of that as we continue doing our analysis. We're on the 5 minute now. The 5 minute has now become like my favorite time frame to trade on and stuff, just because 1 minute can get quite messy and quite stressful very quickly. And yeah, I like the 5 minute. So we have a low created here. We have a breaking market structure here to the upside, like a bullish break of structure. So we can put BOS, break of structure. We have a fair value gap here. That price then comes down into fill right before the London session. Classic price action. Fair value gap right there. So if we wanted to trade before London, we may want to buy that, expecting a run up to Asia's high. And the reason for that is because we anticipate Asia's high and low to be taken. So we can buy. Ooh. Anyway, we buy there, expecting a run up here, where we'd let go of our position above that high. But let's look more deeply into what we can see. So we have a breaker, low, high, lower low. So that makes this candle breaker block, and you'll see our price trades down and taps into that. So call that a breaker. Price comes in, taps that beautifully, and also there's a reclaimed, well, not reclaimed, sorry, there's a proportion bullish order block as well. So that's a proportion block. But yeah, let's also look at how price, we've got an inversion fair value gap created here. Trade down into this fair value gap as well. Classic. To the midpoint, we can mark at the midpoint. See how price comes down into that beautifully. Continues higher, we find support, bullish order block forms there. And we keep stepping our way higher. So then we get out of our position there, and then you can see we have another break in market structure right here to the downside this time, after running out buy stops, and then we return back into this bearish order block midpoint. That's what we call mean threshold. usually call it M.T for mean threshold. Now I haven't sold into these positions before, but what would help me to frame that trade would be definitely the fact that one, it's after 3 a.m. So after 3 a.m. we expect a retracement. Two, we've taken out buy side liquidity, so we should be expecting the sell side of Asia, the Asia low, to be targeted, and I'll get out my position below here. But you can see we have quite a sloppy way of moving down through price, so it's not like the cleanest price action, which isn't ideal, but it's price action nonetheless. And you can see price does make its way through. Another thing we can bring our attention to is the midpoint of this Asia range. And what you'll find as we trade through it, consolidate at the midpoint before taking out the low. Where do we return to? Midpoint again. And to this mitigation, high, low, lower, high. So I'm looking at this level here as a mitigation level. We can make that white. I'm just going to put mitigation, because at the end of the day, that's a lower swing. So price trades into that before we get another break in market structure. Quite aggressively falls here, so we've got break of structure here, and that happens right as the New York session starts. So we trade higher back into this breaker, high, low, higher, high. So I'm looking at these down close candles right here, and I'm looking at them as breakers. And we anticipate some kind of retracement as the New York session starts. Excuse me. I'm also going to mark out the 8:30, because that is where we have the news releases. I do believe there was a news release at 8:30, yes, last week. So again, you can see how we consolidate quite a lot around this Asia low, but overall we're moving lower and price is leaving it. We have an implied fair value gap right here. And you can see how volume closes behind that. So we're respecting this implied fair value gap. Now, an implied fair value gap, they're hard to explain because, yeah, they're hard to explain. We have a low here, high, low, higher, high, broke lower. So this is also technically a breaker, and that's what we traded into quite beautifully as well. So as we trade back into that fair value gap, we could be shorting on that. And then you can see, of course, at 8:30, price breaks down aggressively, running for lows. We have sell stops below this swing low for sure, so we can take off some of our position there. And then we have more sell stops residing even lower. So let's just get these sell side targets marked out. That doesn't get taken till Asia, but we could get out of our position there. And typical of the 9:30 a.m. we see consolidation again, as in we retrace, filling in this imbalance. So from about this high to this low, this is all what we can state is another consolidation. And then we have a reversal at 12. This is typical as well, a run on stops. We anticipate a run on stops at 12 o'clock, very classic price action. But let's look more into this consolidation that we have going on. So we came lower. We have this fair value gap that gets traded through multiple times. Before price leaves it, and then we're going to make a low, a high, a low, low, and price breaks to the upside. And we just about run out this buy side liquidity up here. So we come and grab stops before we finish the day, pretty much returning to equilibrium off the range, which is again is typical of price. We've got a range from this high to this low. Take a look at it. and you'll see that we come back to the midpoint. See how we consolidate at that midpoint from this range? Beautiful. So I've never actually traded after 12 o'clock, but it can be done because, again, ICT's mentioned after the London close, which is 12 o'clock onwards. No, sorry. The afternoon session, you tend to see retracements. So we could look at this break as a breaker if we wanted to buy on that. We got a low, a high, a low, a low. So this is a breaker level. And then we can buy that right here as we trade into that. Put our stop loss below here. We have a fair value gap down here. That price has even reached to, so we can see that as a breakaway gap. I like to make my breakaway gaps yellow. No particular reason, guys. And then we run up towards buy stops here. Again, coming down, 50% offering. So this is first stage accumulation, second stage accumulation, offset distribution. I'll get those marked out for us. So we have first stage accumulation. Here. And then we got second stage accumulation here. When we get a nice run on stops at a point where we anticipate consolidation, because look, we were offsetting our position here, so they're going to be accumulating their position here on the buy side. So that's something to take note of. The price trades aggressively higher, eventually reaching our target for us to then let go of our position and sell back to them, like so. And then we just consolidate, run out stops one more time, and then break lower, running into the New York session now. Asia, next Asia session. Now this Asia session, beautiful Asia session here. As in, when I say a beautiful Asian session, I like to see consolidation in the Asia, because that says to me, okay, they're, building up strength before anticipated expansion for the rest of the day. So this is quite a nice Asian session to study. So there's no point in me going down into the details of it, just a lot of back and forth price action, very typical Asian range. We come down, take the low as we open. We should definitely mark out the Monday open right here, Tuesday open even. You can see our price consolidates at that level. Why? Because we are accumulating where we were distributing. So you'll see our price uses this kind of breaker, low, high, low, low. Like this is the last up close candle. So I like to keep my eyes on these levels, because I like to see our price trades around them, trades through them, before eventually we aggressively trade higher and run back on our positions. But let's take a look. So we've consolidated, and then where do we have, after we've taken out the low, we want to see some kind of break in market structure. So we want to see some kind of break to the upside. We've taken out buy stops here. So then we anticipate a return to some kind of breaker. Well, we've got a low, a high. What's the last up close candle here? Low, low, and then we've broken higher. So again, similar to this level, as price is coming back down into this consolidation, we can be buying. What I'm going to do, if we use the volume, let me see how clear this is going to be for us. I just want to show you guys what consolidation is. Like, you need to, it's so important, original consolidation, to know, to be able to identify the original consolidation, because price has a habit of returning to it, as you can see right here, which obviously you set up. So if you can't buy it in the first stage, you can buy when it returns to it. But yeah, let's get some timings marked out. So at 3 AM here, we trace deeper, trading nicely into this order block and fair value gap right here. So we're simply filling in this imbalance. And when price is doing this, remember, it's filling it in. So it's rebalancing this range before leaving it. Then we have a nice, I'd say this is a nice break of market structure. It's probably clearer on the 1 minute, but like I said, I'm going to focus on the 5 minute, as that's the time frame I'm usually in. So we have a break of structure there. Then price comes down into this fair value gap, offering us a buy. I'll make my fair value gaps orange, as you know. So then we want to go long as price comes down into that and back into this level after 3 a.m. and after consolidation right till 4 a.m. 4 a.m. is also quite an important time. You'll usually see like 4 a.m. there's a continuation or something. For example, here 4 a.m. we can see another setup forms, like we start to break lower, setup right there, and then we continue lower. So 4 a.m. and 3 a.m. definitely sometimes to study. Now I'm not saying, you know, just buy at 4 a.m. or buy at 3 a.m. I'm saying around those times you can anticipate some kind of setup or continuation or another opportunity in general for you to get into price. Another thing I've noticed as well is looking at the opening prices. For example, our opening price for London session was here, and if we look at the open session for the 3 a.m. as well, opening price for this 3 a.m. as well, look at that, it creates almost a range. Now I haven't studied this too much, but I'm going to apply it in this video, but it's just something I've noticed from my own studies. Let me see if I can see it here. So we've got an opening price here, and we've got an opening price here, and again look how price trades back into that. It's like it creates some kind of, I guess it creates a gap or a reference point. We trade to the midpoint of it, and we see the exact same thing happening right here, don't we? So definitely something to study. ICT hasn't directly spoke about that. That's just through backtesting, guys. Buy side, we've got relative equal highs. When I see liquidity like this, relative equal highs like that, I know that they're going to get targeted. It's way too smooth. You can see we aggressively trade through it, find support, and you can see how the bullish order blocks are continuing to show bullish support. So we've got bullish support getting shown here, bullish support getting shown here, bullish support getting shown here, running nicely into that into the New York session before we get a reversal, a New York reversal, and then a continuation higher. So let's go to the 8th. What is it? Oh, these times are wrong. Excuse me, guys. Oh my goodness. I thought, yeah, no. 7 a.m.'s there. 5 a.m. Okay, I'm confused. Right. Yeah. Okay, cool. So let's get that 4 a.m. marked. Deary me. Trade high, yep. Blah, blah, blah. Yeah, so we have a reversal. That's interesting. We get the reversal between 5 a.m. and 7 a.m. Pull back. Offering an entry again. Trading back into this fair value gap one more time. But look at how volume. Look at what volume does. We're respecting the top of that consolidation. So we can be buying as price is traded back into this with the expectation that this is going to provide the support a proportion it needs to trade higher. Anyway, we get a break. Say we do an enter on that. We've got a break of structure here. Very clear break of structure. Filling in this fair value gap. We come back lower. Fair value gap entry and breaker entry. Low, high, lower, low. So we're looking at this candle now as a breaker. And then we can anticipate price to return to it in the New York session, which is what we see. So let's get that delineated. 8:30. I tend not to, when I'm looking for setups before 8:30 and there's news, I'll usually get in the charts around 7 o'clock and see, okay, have any setups formed yet? What do I expect price to do? It is typical to have some kind of run on stops between 7 and 3, because 7 and 8:30, sorry, and that's because usually, for example, New York may open and it may start trading higher instantly, running on stops, or trading lower instantly like we see here. But then you can see we come back down, offers us a beautiful entry for a long stop loss below this order block because price shouldn't want to go there. Plus we have a breakaway gap as well that forms. And you can see we start running for buy stops. So we got buy side liquidity here. And look what happens. What happens? Typical price finds support, not fair value gap. So this is another point for accumulation. Again, remember I was telling you first stage, second stage, and then offset distribution. We've got third stage here. So we've got, let's bring first stage accumulation right here. Second stage accumulation right here. Third stage accumulation up here. So I'm saying we could be buying in all of these. And then of course we get the break in market structure, typical high, low, higher, high, break lower, and then we can expect a run. So we'd want to get out, think about exiting our position up here. So let's just get those. I think we must have traded into some kind of PD array. I think we traded into this level, was it? If you watch my daily reviews, you'll recall this week. I got in on a few nice. Yeah, okay, so we traded into a breaker level. Beautiful. So as soon as it trades into that, we can sell. So yeah, we could get out there. Beautiful. High, low, higher, high, broke lower, breaker structure. What have we had? We got a shift in this. We've got a change in the state of delivery now. Change in the state of delivery, so price should now be bearish. And as you can see, that's what happens. But because at the end of the day, we have quite fluky price action, as in it doesn't have much going on, but very typical fluky, I'm gonna say fluky price action. And then it looks like we consolidate all through Wednesday, which makes sense when you have a big Monday and a big Tuesday like that. It doesn't surprise me when the Wednesday's a little bit dry. So let me just, I don't know how these got there. Let's go now onto the Wednesday. And then make sure this is delineated as a breaker, bearish breaker. You gotta be careful on these Wednesdays though, guys. Especially, look how consolidated this day is. Disgusting. Yeah, right. So Asian range, we could even get in on there. See any setups. Well, we got our low, a high, a low, low. When I'm showing you all these entries, I'm not suggesting you should be trading all the time, because you can see a lot of entries that are forming. I'm just showing how you identify them in price action, and what you're doing is you're subconsciously training your mind. Subconsciously training your mind to identify these patterns, so to speak. So that's a breaker here. And guess what? Again, time. What time does this happen? 8 o'clock? Well, after 8 o'clock, 8:45 specifically. But I'm saying, my point is that after 8 p.m. we hunt and anticipate some kind of setup to form. We have a run on stops here. Sell side liquidity is grabbed. Then we get a break in market structure right here. So then we wait for the return down into the breaker, low, high, lower low. Look at this last up close candle. Drag that out. That's your breaker. Obviously, there's this breaker as well. So like, we want to see overlapping themes. Basically, is what I'm showing you as well. So this is also a breaker. It's got a lower, higher, lower low, broke higher, and you can see our price got quite heavily consolidated here, but eventually reached its target up here. Now let's moving into the new day. We trade higher. We fail to take out the Asia high. Take that into consideration, guys. So we do have a run on stops, but you'll see we failed to even reach for that Asia high, and price then aggressively breaks lower below some relatively equal lows. So we have a breakout structure here. So as far as I'm concerned, once this happens and this closes, I'm like, okay, well, let's start hunting for the Asia low. Come down, beautiful. Grab that low. Price pulls back. Another thing, time. This is where time becomes important as well, because what you'll find with price is that if this kind of price action happened in the London kill zone, we probably wouldn't get a pullback this deep. but it didn't. So it used this to drive price back into itself. It's hard for me to explain, but yeah. So anyway, fair value gap right here. Again, what time do we want to see the reversal or the continuation to the downside? 3 o'clock. Let's mark that out. And there's our setup right here as we traded in. Oh, yeah, bang on 3 o'clock or 3:05. Trade into that fair value gap, offering us a selling opportunity for us to go short with the expectation to run for these lows. And whereas, I guess back into this level down here. So there's imbalances here that need to be filled. So we'll drag them out. Beautiful. So we get out of that position there, and then we want to go short again. Price trades off into that there. We rebalance with that. Again, first stage, second stage, offset distribution. Definitely let off a partial over here, so half my position. Get closed out there, and then full position can get released inside the fair value gap. And then you'll see that price pull back on itself, breaking market structure again. This is the breaking market structure, so we can expect, we would anticipate, you know, some kind of bullishness for the rest of the day. You can see we do trade higher into New York, but then it gets quite ugly to say the least. So yeah, I'm not really gonna say too much on New York. Looking at this level here. Sell side liquidity. Sell stops. So yeah, this is all too much consolidation for me. To be honest, after this trade, I'd be out for the day anyway. And knowing how much Monday and Tuesday moved, I'd be a bit wary after Wednesday anyway. But we have a massive day here on the Thursday and Friday. I actually got in on this move on Thursday. You can see it in my backtesting videos. I mean, you can see it in my trade execution videos, tell a lie. But yeah, because it's been half an hour now, I'm going to continue the rest in the next video. But yeah, thanks for watching guys, and I'll catch you in the next one. Peace.